So today's podcast is about credit card debt. There's a lot of great information to digest here, but really the fact that it happens in life, sometimes unplanned, but Jim really talks to how we can get ahead of that. There's some crazy statistics in there. So listen closely, take some great notes on a method to help get yourself out of credit card debt. But then on the backside of that, really leveraging credit cards to help make money as well. So definitely stay tuned. There's a lot to learn in this podcast.
Welcome to the Close to Home podcast. Real people, real life, real stories. Insight and inspiration from Close to Home brings a fresh perspective on home, business, and life. Join the professionals across real estate, construction, insurance, and financial lending to gain perspective not only from their individual professional experience, but also from their life stories.
Good morning, everyone.
Good morning, Ashley.
How's everybody's week going?
It's good. It's busy.
Very busy.
Anything extra exciting this week?
Well,
Dan, you got some stuff to talk about.
Yeah, we're moving some dirt on a commercial development for me and my wife, and Ashley and Patrick and I were hanging out along with their children. Wyatt, he was a little worrywart on Saturday, and he was fun though. He's like Patrick came over and he was pulling an old barn apart and wound up knocking it down with a skid loader. And little Wyatt, he was sitting over there and on the back of Ashley's pickup. I don't think this is a good idea, man. I really don't think this is a good idea. I think he's gonna get hurt. I don't know. Like, hell, it's all right, bro.
Yeah, he's definitely, his daddy is his favorite person in the entire world, and he looks out for him for sure.
Yeah, he was definitely very, very protective of him on Saturday. But it was fun.
Yeah.
You know, Patrick got to play around a little bit and
Knock down a house.
Yeah.
And this wasn't just any house. Tell us a little bit more
Yeah,
about
so it used to be an old barn that we had on this piece of ground, and then they converted it to a house in like the 90s or something. But the guy that actually sawed the lumber for this barn was sitting there across the road with the neighbors watching them take it apart. So he had cut this.
Aww.
He'd ran everything through the sawmill in like the 50s or whatever, late 50s, and he was,
sentimental.
Right, yeah. Emotional, yeah.
Yeah, I think, he was ready to see it go, but at the same point in time, he was like, boy, that was one of the first jobs that I ever did, you know? And so he was okay. You know, it's getting bigger and better what it's being replaced with, but it's, definitely a lot cleaner now.
Tell us about the satisfaction of the destruction.
Oh, dude, it was...
Come on, everybody.
It was fun to watch Patrick knock that thing down, but what was even cooler was these guys that are moving dirt, the mailers, they came in and in one day got rid of so much stuff. It's amazing what a good operator can do. Actually, you've seen this stuff all the time. And,
oh, yeah.
And every day I drive back by this piece of property, and they started on Monday. Today's Friday. And it's completely transformed in a week. It went from...
cluttered haven.
Yeah, it was.
Are you snapping shots so you can kind of keep the?
I am. Yeah,
timeline?
And I'm trying to do my best to do it. But he's moving stuff so quick that I almost can't keep up on some of the stuff. So I'm going by there and taking videos and pictures and stuff every day, and even like from the beginning of one day to the end of the next day. Actually, he called me earlier and he's like, "Hey, I'm gonna scrape some of this clay off from this pad and push it down in some of these fill spots." I'm like, whatever, dude, you got to do whatever you got to do. He's meticulous. He probably had that pad within an inch eyeballed, and it's a big pad.
Yeah.
It's an 8,000 square foot building. So it's not a small pad. It's not a giant pad by any means, but to eyeball something that's that good, he's a good operator.
So what is going on this property, Dan?
We'll talk about it in future podcasts. I'll leave
us hanging.
I'll leave you hanging for a little bit, but it's a commercial development for my wife and I.
It's a casino.
So.
I just know it is.
Jim, you wish. You still got casino in your mind from last week.
Go ahead.
Well, let's go ahead and jump in and get started. So today's podcast is brought to you by Epic Design and Build. That's Epic with a K. Reach out to them at 314-570 1406, or you can also reach out to them online at epicdesignandbuild.com. Let's dive into today's topic.
So today's topic is all about credit card debt, right? Is that what we're talking about, Jim?
Credit card debt. We're going to talk about
how does it work? What are the stats? We want to know all the good stuff.
Okay, let's not dilly-dally. Let's get on the important stats here. So here in this United States, we're at the highest we've ever been, $986 billion in credit card debt.
$986 billion.
Billion, yes,
Holy cow.
$986 billion.
So what's the breakdown on that? How many people live in the U.S.? Is it like 360 million or something?
It's isn't it about 250, 270? It's up for debate apparently,
Okay.
but a lot. So the average APR is also at a high, 23.84%. That's almost 24%
24%.
average being paid out on this $986 billion. Now, I don't know about you guys, but my calculator, we got to get on the phone. You can't use a regular calculator. You're not going to get these digits.
That's robbery.
Sounds like we need to open up a credit card company.
I would, yeah. How much money do you need to start a credit card company?
I don't know. That would be good stuff to research
I would love to know
and
that.
get
'Cause
out.
if I can loan money out for 24%,
Sweet.
You need a lot. Let's see, what kind of fraction would that be in 986 billion? That we could come up with to lend out.
I don't know.
Okay, more stats. And I don't know how accurate this is, and of course it's going to change minute to minute, but 6.5% of the population's about 30 days or more late.
Late
Good,
as
bad,
in-
indifferent. More than 30 days is considered late. A lot of people think about that with your mortgage payments, with your credit card payments. Now, your credit card payments, when it's late, boom, you're getting charged.
Yep.
With your mortgage payment, generally, and you got to watch what's a weekend and what's not, but generally you have about 2 weeks of gratis, where it's actually not late. So if your payment's due on the first,
There's a grace period.
yeah, you have a couple of weeks. Now, the reason I say be careful is because, if the 15th lands on a Saturday, versus a Sunday, 2 weeks is plenty of time. Get them in.
Right.
Now, you could get a late charge after the grace period, but you're not going to get a credit ding until you're 30 days late. So you have to go to the 1st of next month.
So if your credit card is late, is it different than if your mortgage is late? So if you're, we'll just stick with the 15th. If you have a payment due on your credit card that's due on the 15th and you don't pay it until the 16th, do you get a ding on your credit or you just get a late charge?
Just a late charge. You're good until the 15th of next month to get a credit report.
Okay.
Now, here's something else, and we didn't talk about it. It's not scheduled or anything, but if you're a pretty good pay and you forget a credit card bill, I'm not going to tell everybody that I haven't done this once a year, maybe once every other year. Call them up. Hey, I just completely forgot this payment, Or like, oh, sure thing, Mr. Grasso. I'm like, it's talking about my dad? No, it's me now. but the point being, is that they will generally give you, gratis.
forgiven,
Yeah, of course.
Yeah.
And they'll reverse everything and they'll,
Yeah,
strike
life
that.
happens. I mean, even really solid payers have, hiccups in life or just get too busy and forget.
Yeah.
Maybe
I recently came across a situation where auto pay on a lot of different bills just started getting declined because my card expired and I didn't know. Like life got me busy and
Common.
and
Very common.
some of those bills, they sent out, notification, no big deal, swapped it over. Some of them didn't. And all of a sudden my bank said this was declined and I had to go hunt down them.
right.
But,
That
you know,
happened to
so-
us too. My wife lost. I think that we had our water bill that was set up on her debit card as an auto pay, and she lost her debit card. She had to get a new debit card, new driver's license. All of a sudden, I get this call from the water company, and they're like, "Hey, you haven't paid your bill in 2 months. I'm like, what? We're on auto pay. He's like, no, that card was shut off. I'm like, oh my gosh.
So here's
it was a quick fix. It was a phone
Right.
call.
Here's a tip. If you can, put your automatic payments on a routing and account number. I know for insurance, that's why it's actually cheaper, because things don't bounce like that.
Right.
If you're going to pay for something monthly.
Mine does. I don't keep enough in there.
Jim. But that, again, that's credit cards do expire, and so you have to.
I think that's what we wound up doing, was putting it on the bank instead of the
Yeah.
debit card. We put it to the checking account. But
Yeah,
the debit
'cause
card's tied to.
If there is fraud on a debit card, that number will change, but your routing and account number won't. So
Interesting.
that's really helpful to, if you do have some of those automated bills, get them on a routing and account number.
I'm shy about that,
Shy about what?
by using my personal account, but I do it in some cases where they have extra charges and different things like that.
Yeah.
So, well, the last stat that I'm going to leave you with is we're going to look at good old Missouri since we're here. The average balance that people are carrying right now is about $6,600 in credit card debt.
That's
No.
what's rolling over every month is approximately.
If you were to
66.
average it, now there's some people that have zero. There's some people that have 2,000. There's some people that have 40,000.
Sure.
Right.
You know, and I guess all my clients are the ones that have 40,000, but that's fine. you know, but you know, and I was one of those, and we'll get into it. You know, I've done this about 3 times. Oh, I'm never letting that happen again. Well, yeah, I let it happen again. But anyway, you keep punching. So let's get into this. So if you've got credit card debt, that's what we're going to cover here. So to pay back your credit debt, you need to consider paying more than the minimum balance. Now, everybody knows why. Let's say you got $6,000 in credit. Even if you just divide that out, like I want to conquer this in a year, think about how much money that is.
That's a big number at 24%.
Oh, yeah.
Right.
It's a
Right.
Benz payment, you know?
Right.
So the thing is that, you know, when you pay your minimum payment, and we've all done this, what happens? What do you see on your next statement?
The
Balance-
amount's actually higher.
Yeah.
Yeah.
Balance grows.
You didn't even put a dent in it, you know? And so this is the things that we don't think about when we're using it. Hey, we got room on the card. Well, we need a new sofa. Let's go out and get it, whatever the case is.
That snowball effect is real.
So
Yeah.
at the bare bones minimum, you want to shoot for a little extra on that. Get it paid. Okay, zero balance transfer to another card. That's another thing that you can do. And sometimes there's specials out there. Look for them. Sometimes they'll give you an introductory, take our card, you know, move it. Sometimes they'll hit you up front, you know, like 3%. But what's 3% in the scheme of a 24%
Right.
payment?
You're saving 21%.
Right? So get it. Look at the terms. Make sure you know what you've got in front of you, because sometimes it'll say 12 months, 15 months, 18 months interest free, and all you paid was 3% going in. Look, you know, I'm no mathematical whiz here, but that's saving money if you're
Right.
paying 24% a year. Okay. The third thing is you can consolidate or refinance your home, and it's going to come to this point. Now, what are we all thinking? Exactly what we're thinking now. Hey, I got a great rate. I'm never touching it. Okay. Well, if I'm one of those that has some credit card debt piled up due to circumstances I couldn't help or whatever the circumstances are, you just basically might consider, you know, either consolidating that in a refinance or taking out a HELOC. Now, a HELOC is kind of a step to the side because, does everybody know what a HELOC is?
Home equity,
Yeah.
line of credit.
All right. Thank you, Dan. The reason you're basically taking revolving debt and putting it back on revolving debt, but you're doing it at a lesser rate and you're consolidating it. Anytime you consolidate, usually you save money. Okay. So if you're considering that, probably a step closer would be to wrap it up into your house. Now the rates are in the ballpark of the 6s right now, high 6s if you're cashing out, mid to high 6s. That's about where they were when I was purchasing a home, but everybody looks at the rate. Don't look at the rate. You're paying 24% right now on Lord knows how much, but
Right.
if you have to look at things for what they do for you. So yeah, I'm taking a 6% rate on my house, but my credit card debt that I'm paying $2,200 a month now, my mortgage went up $300 to $400 a month, and I got this higher rate, but I saved, $1,600. Well, but it's still not a prudent move because you rendered that rate you had on your house. Wait a minute, how much groceries is that per year? How much needs? How many shoes? How many, the needs for your family? You have to consider that, and a lot of people will, and a lot of people just say, oh no, I'm not touching that. That's
Well, if you've got a really good rate, there is, from what I understand, you could, instead of doing the cash out refi, you could do a HELOC, right?
you can do a HELOC
Because that's
and
tied more to a commercial prime rate, right?
HELOCs are attached to prime. What's prime? 8.5.
Yeah, somewhere in
Right.
there.
Fannie and
Fannie Freddie normally beats the commercial rate.
Well, they do, and they're fixed. Now, so here's the thing, with prime, you're paying prime or prime plus if you get the HELOC. There's a very few companies out there, and you can find them, but sometimes they're locked under prime. So you're always paying a little bit less. But here you are again in an unstable thing. Now, this is the other thing with most HELOCs. So you've got $50,000 out on it. Your payments, roughly $400 and something dollars. I'm figuring about 8%, right? Okay, so the bottom line is, if I pay that $400 on a HELOC, what happens?
Nothing. It's an interest only payment.
You guys, does everybody understand that? Nothing. You're paying $400 a month, and that balance isn't going down. So a HELOC's a money manager's account. Again, same as a credit card. If you don't have the money, don't spend it. That's the thing.
Right.
Unless you have to. Now, again, remember, close to home here, we're about real
Right.
life. Sometimes you have to,
That's right.
Right.
and that's why they're there. Okay. Questions, comments? This is good stuff because this is something pertinent to all of us. Look at let's go to my patented Jim method. And this is probably
Patent pending, or is it?
not.
Did it go through?
A lot of people won't think this far into it. And you're talking to somebody who's been through an awful lot, including a bankruptcy, and I have racked up the credit cards a few times. But and I will tell you this: pre-bankruptcy, perfect credit; post-bankruptcy, perfect credit. So I was one of those, but I had a lot of credit, and I have buried myself at least 3 times.
But you come from experience. This is real life. And so for anyone who can speak to it,
Oh yeah.
you're an ideal person.
Well, I appreciate that, and that is true. That is true.
Yeah. You got buried, but you unburied yourself
Yep.
3 times too.
Yep.
Of course, and you're going to do it. It's just like and I always compare everything to a diet. You got to get right back on it. So let's look at your statement. See which cards have the highest interest. Okay, which ones have the highest interest? It's on your statements. Hey, this one's 19%. This one's 23%. Wait, I got one in here that's 8%. That's the one you had since you were a kid. But
Right.
look at that. Check your minimum payments to balance ratio. What does that mean? If I owe $4,000 on this payment here, maybe it's an installment, maybe it's credit card, whatever the case is. But if I owe $4,000 on it, but I got a $250 payment on here, that's pretty big. So if you have a smaller balance with a bigger payment, maybe you make that the focus. So figure out which ones are doing the most damage, which ones are denting your economy. Okay, now figure out how long it'll take to pay them back at the rate you're going. Guys, this is really depressing,
Yeah.
because you start to realize what you've done and how long it's going to take you to fill that bucket. Okay, now that you've done all this and you've made all these calculations, you're bummed out, let's talk about the real resolve here. Okay, throw it all out. Everything I just said, throw it out the window. Get rid of it. We're real people. We have real demands, real problems, real expenses. We have to keep on living, right?
Yeah.
Step 1, take the lowest balance. Okay? Those of you who listen to some of these other financial experts, they might contradict me here, but take your lowest balance. Let's pay it off first. Okay?
Yeah. And I'm curious, what's the reasoning behind that? Because I think that I probably know your reason. Is it to show yourself that you can actually do it? Is that the reason why you would pay your lowest balance off first?
Yeah, it's exactly what we're getting to. Okay. You're going to celebrate your own small wins, and you're going to do it all the way along. And you're going to, again, having done this 3 times, I've done it the appropriate written way, and then I've done it different ways. This is how it works for me, okay? Because, again, I feel like I'm a real person. I feel like I'm living that medium life where I'm not putting everything into the future, but I'm not negating the future either.
Right.
So take your lowest balance, pay it off first. 3 months, 5 months, 9 months, 12 months, whatever it is, okay? Let's do this. Each time you pay something off, have a small celebration, okay? Now,
not on the credit card.
Not on the credit.
Okay.
Don't celebrate on the credit card.
Okay, so you got the now. Okay. Okay, so that's Dan hit the nail on the head.
Financial advice from Dan Stokes.
It's amazing that he listens, isn't it? He was the first one off on that. Okay, so each time you pay something off, have a small celebration. For me, what is that? Well, hey, maybe we'll throw some steaks on the grill, have some vino, whatever it is. Maybe because this is a smaller celebration, right? Recognize your goals, and as you achieve them, you should do this anyway. Everything that you do, you should appreciate yourself. I had 9 things go wrong last week, but 1 went right. You know what? Hell with the 9 things. Let's celebrate the good one. Why not? Okay, I've done this credit card thingy 3 times in my life. It really works, okay? And as you knock these off, you might as well call them your milestones. It feels really good. So, and we touched on it, but it's like my diet, 1 pound a week. People say, aren't you taking it easy on yourself? And you hear me say this over and over. I usually say by this time next year, I could be 52 pounds less.
Yeah.
So
I'd never heard one pound a week until I met you, and I'm like, that's a really freaking good idea.
Yeah.
It actually is effective, provided every time I make a wrong turn, I jump right back on. I don't say, well, hey, we'll wait till tomorrow or whatever the case is.
You're not celebrating your 1 pound you lost last week by going and buying a cookie cake.
But that's just it. If it's slow and steady, whatever it is, then that it's long term, right? That's the marathon, not the sprint.
Well, yes, and it's like telling your kid, hey, well, if you don't do this, then tomorrow, they don't care about tomorrow.
No, right.
Well, that's me. That's me. So now that I'm grown up, basically, when I fail at this, I know the consequences are next week. I'm going to have to do a little bit of starvation on top of whatever I'm doing.
Right.
And it's like, oh, I remember that. It helps me to get back on the straight and narrow. So I'm getting familiar with this method. And you can do anything you set your mind to. Now, a lot of people, when you go to different clinics and things like that, there's all kinds of different things that they'll tell you. And have you ever been somewhere and somebody tells you, you have an illness, and you're talking to an obsessive compulsive person here, with some bad habits, from gambling to this to that, and I like my food, so, it's one of those things where, folks, it's really true. Discipline and willpower are a part of what we have inside us, and it doesn't make us sick because we're gluttons for, look, too much of anything good is wonderful. Right? So this is part of the life and part of what we want to implore here to everyone is how to do these things your way, what works for you, and it doesn't mean you're sick because you keep going out and, going to, on a shopping spree and charging it back up. This isn't something that's going to work overnight. So jump right back on the wagon, measure your success. You'll find it suits you. You really will. And, there's going to be hiccups. You're like, darn it, I had to do this, right. But, thus is real life. We all have this. Okay, once you have these credit cards paid down, let's make a little emergency fund, okay? Don't go out and start using these credit cards again. Make an emergency fund, right?
Yep.
That's what we want to do. Okay, now I sound prudent, and I'm sorry. But this really is true, because what we want to do is once we have that, then we can conquer from there and use these credit cards to make money. And this is what we talked about on different occasions. Guys, you know this stuff. Pick one credit card, set it up, put your utilities on it, your TV and various memberships. Use it for gas, groceries, dining. Now, we just talked about a couple of things here that are pretty important, so let's cover those. We talked about the expiration of the credit card, or what if you didn't renew it, or what if you canceled that and then reopen it? I mean, you've got to stay in tune with these things.
So let me ask you this. You just said, what if you cancel a credit card? I've got 2 credit cards. One that I've had for a long time, and it doesn't have a super big balance on it, like 10 grand or something. Not balance, but like limit. I haven't probably used that card in 4 or 5 years. I can't remember when the last time I used it was. And they just sent me a new one because it expired, or it's expiring. I renewed it and I tossed it in the safe. That's an emergency, like.
Yeah.
But
what's in Dan's safe? Anybody wonder? Anyway, go ahead.
We're not going to talk about that.
Guns.
So I threw it in there. I probably haven't used it in a long time, but I kept it open because it's a long-term available credit. Is that something that's wise to do, or should I cut that card up, throw it away?
Doesn't that help with your credit?
Okay, so when you look at a report, basically, and you look at people look at Credit Karma, different things like that, and we can talk about the details of that later, but one of the things is your credit usage. So if you have $30,000 of credit line, optimally, that's good. It's going to give you a higher score. Now, this is daunting, but if you have 30% of it out, you might even have a higher score. The magic area is between 30 and 35% credit usage. Now, if you can keep it down, and the bigger credit lines that you have, all your accumulation of credit, that's going to keep your credit healthy. So if I'm going to buy furniture at Sam's, some outdoor patio furniture, and it's going to set me back about $3,000, if I apply for their credit card, I would probably ask them for about a $9,000 or $10,000 line, because I don't want that to damage my credit. If they give me a $3,000 credit line and then I charge the whole thing up, that could damage your credit a lot more than,
And what's the number? Like, I know I'm kind of going down a rabbit hole here, but if we're talking about the difference between a 650 and a 750 number, then that's probably significant. But if you're talking about the difference between a 740 and a 760, does it really matter? No,
not too much. About a 740 will get you tip top.
Okay.
Items wherever you're going. Okay. So to keep things short, we kind of talked about this credit card debt. So we've conquered. So here we go. Let's move forward now, and let's talk about the reverse effect of this. Okay. So if you've got an income, or what's the average income in St. Charles? It's usually, two household incomes. You're in the ballpark of between $130,000 and $200,000 a year. Okay. If you can figure out how to get 3%, 4%, and 5% back, there are credit cards out there. Now, I don't have them all listed, But there's gas cards, or there's cards out there that'll give you 5% on your gas, 3 to 4% on your dining, you know, and 5%, you know, depending on where you shop and different things like that, along with the accumulation of air miles. Some of them have other perks like, you know, Uber, hotel discounts, you know, things like that. Well, even if you take an income, let's say a household income on the lower side of about 100,000, right? What's 3% of that?
$3,000.
Right. Divide that out over the monthly. What do you got there? You know, yeah, you know, between 250 and
$250 a month, yeah.
$275 a month, you know, that's, you know, gratis coming back to you. Now, instead of you paying interest,
Right.
you know, you're actually utilizing that. If there were a way for me to pay my mortgage on my credit card, I would do it. Now, there's all these companies that claim that they'll help you out with that and all that, but they take, by the time you go through everything, it's not really.
It's a pretty big.
Yeah.
So you're saying like credit cards aren't bad in general. Obviously, the debt is not ideal, but you can actually use credit cards to really help build wealth as well. Like,
so
you just have to have the right strategy, willpower, mindset, etc.
Okay, so I got yes, and so here's the beauty of it too. Once you get set in this way, and how many people have done this? You know, you run the card, a few times. You're like, yeah, I got it. You know, and then the bill comes. You're like, forgot about that.
Right.
What is
Right.
this? You know, and you got that shock that goes through your body, and you know, hey, don't fret. You know, if it takes you a couple of months, you know, do it. But you know, take a big chunk out of it. Don't be afraid to overpay on a credit card. Anybody? Come on, you guys. Why?
Paying less interest.
Yeah.
Right.
Well, you got that, but if you overpaid, what if you you know made yourself short? What do?
What do you mean? If you underpaid?
If you overpay your credit card, you're like, oh boy, put too much in there. I need a little bit more here to
Use your
get through
credit
the
card.
month. Boom. Right? What's the harm in it? So
Right.
that way, if you
Yeah,
can
just
do it,
reusing it.
you did it. You know, hey, I wish I hadn't paid that much, but you know, if I need it back, I can do that. And when we talk about HELOCs later on in the different programs and whatnot, we'll kind of cover that thing. But okay, so the final things to close this up, unless you guys have any other questions or comments, is some of these credit cards will itemize and they will show you what you're doing. And I'm going to tell you something here. My dining out, somebody should have been beating my buns. I'm looking at how much money has gone out. You know, it's like, well, we're in a hurry. You know, we're doing this. You know, there's all these excuses not to eat at home. Well, I'll tell you, I'm eating at home an awful lot more because that can add up so quick.
Yeah.
Yep.
So quick.
Even just twice a week of fast food. I mean, heck, you're at $15 every time. You can't, but for yourself, it seems like you pull into Wendy's or DQ or whatever. And it's like $12 for a hamburger and a freaking drink. What? Like, really?
Right.
You do that twice a week. You're at $30 a week. Now multiply that by 52 weeks a year.
So
And families, large families.
Big family when you go out, you know,
I mean,
and Big Pop over there picks up the tab.
Dan, you're picking up our tab? Thanks.
So
You guys have too many kids.
but the thing is, you know, and Ashley and Patrick, let's run them over a little. You know, you got 2 kids. It's probably still okay, prudent, whatnot. Wait till they get older and eat as much as the teens eat. You know, it's like it really changes the budget at home, the groceries, and when you go out. But you know, thus is life. You got to find that happy medium. And so, listen, some people want to talk about this, and we're willing to talk about this. You know, and there is more than one way to punch out of the bag. And if you have contradictions, you know, to this or want to share something, reach out to us.
Right.
So can we release our email now? Ashley, do you give me permission to do that?
Sure. Go
All right.
for it.
So we have an email that if you guys would like to know, if you guys have questions, you would like to know information, you guys can reach out. I believe that it's on our Facebook page, but it is close to home 636@gmail.com.
Yeah,
Close to home 636@gmail.com. You guys can send questions, podcast information, whatever it is you guys would like. Please send us an email there.
Yeah. We'd love to
hear
input.
Yeah.
Anything.
Feedback, different topics you want to hear about. Yep.
Absolutely.
Questions, etc.
Uh-oh. What does that mean? Is that time for today's trivia?
It is time for today's trivia. All right. Who do we pick on here? We pick on Jaclyn or we pick on Dan?
Jaclyn.
Oh, geez.
All right. Jaclyn, when was the first maritime policy recorded for insurance? And what is maritime?
I'm going to,
It has to do with boating.
Boating.
the first boating insurance.
But that's bad that
That
I
is
don't
correct.
even know what the year is.
Was it before or after the Titanic?
It was well before the Titanic.
Ooh.
Interesting.
Well, since you brought up the Titanic, we might as well talk about it. The Titanic, they canceled the lifeboat drill that day. A lot of people don't talk about that.
Seriously?
Yes.
Really?
Yes.
Gosh.
Okay, so the first insurance policy recorded that they could find was Genoa, Italy, 1347.
13.
Goodness.
Holy cow.
That was probably something that your parents wrote. You know, it's like,
Wow. He didn't mean that.
That is way earlier than
1347 for an insurance policy.
Was
I
it more
had
like
no
an
idea.
IOU?
Yeah. Well,
On like
so interesting part is, like the first homeowners policies that started recording were in the 1950s. Think about that. And I thought that was a little late
Yeah.
Yeah.
here in the States.
1347.
Wow.
1347. Yeah.
Wow.
My gosh.
All right.
Can you imagine Dan in 1347? Me rates! They're going up.
Oh, wow.
my goodness.
Interesting.
Oh, boy.
Well,
All
Jim,
right.
before we wrap up for today, I do have a question and kind of have my own thoughts on this, but I think it's really important that our listeners know too. Credit card debt is something that if you don't understand it, you can't, and you're not educated in it, or you don't have somebody to help walk you through it, it can really take and put a burden on your life. And what is the one piece of advice that you might give to someone that is just starting out building their credit, or a parent that's trying to educate their children on it? What's some bit of advice on how you would navigate that?
So it's interesting, and there's so much to do on credit cards. There's probably 3 other casts that we could do, and one of those is possibly the authorized user, where mom or dad can get on this and do this. And when my kid bought his first house, I made him an authorized user on like a Capital One credit card, and basically, I can't remember if it was Freddie or Fannie as far as the home loans, but one of them didn't like the authorized user, but the other one, was fine with it. I made him, get used to using this, paying it, and that was how he got established. But there's a whole bunch of other stuff that would probably coincide with when I had to rebuild after a bankruptcy that would be good for kids to do and parents to get their kids involved in. And we can talk about those things, but there's credit installment CDs where, say, you want to have a $2,500 CD, right, where it earns a little bit of money. Well, some banks will do that as a credit building program, and you'll pay them, the monthly fee to get to $2,000. And right now, what are CDs? About 3.5?
Like 3 or 4,
Okay.
4.5, somewhere in there.
The bank will split the interest with you, but at the end of these payments, you've A, established to your credit history, B, those funds are available. You can either roll them over or put them into your account. That's a beautiful way to earn credit or even a down payment on a house. So that was the other thing I had my kid do, was do a mock-up payment as to what we thought the house payment was going to be, while he was waiting for the home to be built. And that was also a really, really good thing. Yeah. He didn't really have the payment shock after he moved in. And we don't think about that stuff, but I had a friend, and he said, yeah, I'm doing that now because he wanted to know what it was going to be like to cover the bigger payment. He's like, well, I'm going to start doing it now.
Right. That's a good idea.
So that minus what he's paying now to get a feel for what this, new house is going to cost. It's interesting.
Could even do that with a car. I mean, it doesn't have to. You don't have to wait till they're of that maturity. We could.
So could I start with my daughter now, you think, or is that a little early?
Why not?
Start on her first walker
it's
or
like
maybe a little early.
You got to pay off this wagon.
I think you should have Jaclyn write you a little policy on her that
a little radio flyer
that accrues, over the years, and I did do that when my kid was little, and it was hard, but I had all this extra gambling money because I quit gambling when he was born. So the other thing, Ashley, to your point, is you can do a secured credit card where, you post the money, and then they have that.
That's a good idea.
To swipe and earn, and then after a while they'll convert that from a secured card to an open line of credit once they can, you've demonstrated the responsibility, in getting the payments in.
It's a really good idea.
So those would be my two tidbits on that. That's a really good question. It's above my pay grade.
Well, what? I think that there's a lot of questions that got answered today, and thanks for doing that. So, I think that we're going to go ahead and sign off, and we'll close it out, and make sure you guys stay tuned next week for the balancing work and life. I believe that's our next topic, right?
Yep.
Thanks, everybody. Reach out if you got questions.
Absolutely.
Appreciate it. See you guys next week.